She almost lost the house over $340. Not the mortgage, not the roof, a property tax bill that crept up year after year until it finally crept past what her fixed income could cover. Call her Linda, 68 years old, widowed 4 years ago. The house was paid off in 2009, paid off, done, hers, and she still nearly lost it to a tax bill. Linda thought there was nothing left to do but sell. She was wrong, and by the end of this video, you're going to know exactly why. Here's the part almost nobody tells you. Most counties in this country are sitting on relief programs that quietly shrink or freeze property taxes for older homeowners, and most of those counties are not required to call you and tell you that you qualify. You have to ask, and most people never do because they don't know the question exists. There are 3 of these hiding in plain sight. Stick with me because the third one is the one that changed everything for Linda, and it might be sitting in your mailbox right now, unopened. Let's start with the one almost everyone skips past without a second look, the senior property tax freeze. Here's how it actually works. In counties that offer it, once you hit a certain age, usually 65, sometimes 62, and your income falls under a set line, your property's assessed value gets frozen, not your tax rate, the value itself. So even if home prices in your neighborhood shoot up 20%, 30%, the number your tax bill is based on stays locked where it was the day you applied. Linda's neighborhood had exploded in value. New families, renovated houses, prices nobody recognized anymore. Her tax bill had been climbing right alongside them until she froze it. Same house, same street, a bill that stopped chasing the market. The second one is smaller, but it's tax. It's called a Homestead exemption, and here's the twist. Most people already have the basic version and don't realize there's a bigger, senior-specific version sitting right on top of it, unclaimed. The basic Homestead exemption shaves a flat amount off your home's taxable value, just for living in the home you own. Fine. Most homeowners get that automatically, but dozens of states run a second layer, an additional senior exemption that can double or even triple that reduction, and it is almost never applied automatically. You file for it, or you don't get it. Full stop. Now here's why this year matters more than the ones before it. Local assessments got updated, income thresholds moved. In more than one state, the qualifying income limit for these programs was raised this year specifically because home values had climbed so fast that longtime owners were getting priced out of their own tax bills. Lawmakers saw people like Linda about to lose paid-off homes over an assessment number, and they moved the line. Which means if you were turned down 2 years ago, sorry, your income's $2,000 over that math may not be true anymore. The line moved, nobody sent a letter announcing it moved, you find out by asking again. I've seen this exact story more times than I can count. Someone applies once in their 60s, gets a form letter denial, and files it away as a closed door forever. 10 years pass, they never check again. Meanwhile, the threshold has climbed 3 or 4 times quietly through nothing more than routine adjustments, and the doors been standing wide open for years while they stopped knocking. So let's add it up, because the number is bigger than people expect. A frozen assessment can save a homeowner in a fast-rising market anywhere from a few hundred to well over $1,000 a year, just by refusing to let the tax bill float upward with the neighborhood. The senior homestead layer, stacked on top of the basic one, commonly knocks another few $100s off the annual bill. In some counties, a great deal more. And the third program, the one I promised you, is the circuit breaker credit. This is the one almost nobody has heard of, and it's the one that can be worth the most. A circuit breaker credit works differently than the other two. Instead of adjusting your home's value, it looks directly at the relationship between your income and your tax bill. If your property tax bill crosses a certain percentage of your income, meaning it's eating you alive relative to what you actually make, the state sends part of that overage straight back to you, sometimes as a direct check, sometimes as a credit on next year's bill. For a homeowner on a modest fixed income with a tax bill that's grown too large for that income, this can mean a rebate running into the hundreds, occasionally over $1,000, arriving once a year like clockwork. This is the one Linda had never heard of. This is the one that kept her in the house. Picture her exact situation: a paid-off home, a fixed income that hadn't moved much in 5 years, a tax bill that had crept up every single year regardless. She froze the assessment, she filed for the senior homestead layer, and then she found the circuit breaker credit almost by accident from a neighbor who'd used it for years and assumed everyone knew. Stacked together, those three programs cut Linda's annual tax burden by more than half. Not a sale, not a reverse mortgage, not a single change to her home. Just three forms filed with the county that most of her neighbors have never heard of either. Before I give you where to start, I want to mention something I built for exactly this: every property tax relief program by state, the deadlines that actually matter, the exact office to call, and the exact words to use when you call. I put it all into one guide called the Homeowner Relief Playbook, written in plain English, no jargon. Just the numbers and the steps. If you want it, it's linked below, but everything you need to take the first step is already in this video. Here's what to actually do. In order, call your county assessor's office and ask by name about the senior assessment freeze and the senior homestead exemption, both in the same call because they're filed differently in most counties. Then call your state's Department of Revenue or Taxation and ask specifically about a property tax circuit breaker credit or property tax relief credit for seniors. Not every state uses the same name for it, so ask for it by description if the first name draws a blank. All three are free to apply for. Nobody legitimate will ever call. You first offering to file this for a fee. If that call comes, hang up and dial the county yourself. Because here's the truth sitting underneath all of it. Nobody is going to knock on your door and tell you your assessment is frozen for the asking. These programs exist quietly, funded and waiting, built to help exactly the people who never find out they're there. The system pays the people who ask. It says nothing to the people who don't. If this opened your eyes, send it to someone you know sitting on a paid-off house and a fixed income, someone who's already decided the county doesn't owe them anything. They might be one phone call away from cutting their tax bill in half and never knew it. Subscribe and turn on the bell so the next one finds you.